20 million American residents face eviction. Wow. It's going to get ugly, folks. Hey everybody, JJ here. It is Friday, July 10th, 2020. Thank you for coming back. Welcome, Bulls and Bears. Let's get right into the news today. Recent article here out of Yahoo Finance. Renters, homeowners face new phase of virus crisis with evictions and foreclosures looming. Now, we've been talking about this for quite a while now on this channel. What's going to happen when the moratoriums are done, when you can actually, as a landlord, you can evict tenants? And we're going to talk about the larger impact of this, but let's just read an excerpt out of this article. A potential housing crisis is on the way for millions of Americans whose mortgage and rent deferrals are about to sunset. Evictions loom as the end of state and local moratoriums will no longer protect homeowners and tenants unable to make the payments because of the virus shutdowns. Some U.S. states have already expired orders against evictions, and a host of others across the country are set to expire over the next 2 months. This housing situation could start getting real ugly real quick. The article continues, once they do, residents are facing a possible flood of non-payment legal actions. The Eviction Defense Project predicted recently that by the end of September, more than 20 million U.S. renters are going to be at risk for eviction. Now, the question we need to ask is, let's say there are millions of people evicted. What people are going to take their place and move into these apartments and homes that these people are evicted from? Right? If we have so many people without jobs, are the landlords going to evict these people only to have their apartment or home sit empty? Well, I don't think so. Or they would be pretty stupid to do that if they don't have a new renter lined up. With so much unemployment, will they be able to find a new renter to pay the prices that these landlords are asking for? Right? So what's going to happen? They're going to have to lower their rents. It's pretty simple, supply and demand. If half the population is broke and jobless and people cannot afford to pay the rents that you're asking, you're going to have to lower the rents. It's pretty simple. Also, let's talk about foreclosures out of this article here. According to recent data on Friday released by mortgage tracking firm Adam Data Solutions, homeowners most at risk for foreclosure during the second quarter were those in metropolitan markets along the East Coast and northern Illinois, with clusters troubled of borrowers in New York City, Chicago, Baltimore, and Washington, D.C. Okay, if you've been on this channel, you know this. The metropolitan areas have the biggest run-up in prices in both rents and home prices during good economic times. When the downturn hits, when the economy stops like it is now, we're in a frozen economy, those high prices correct the most rapidly in these high-priced cities. And if you've been watching the news, you probably know that crime has already skyrocketed in many of these cities. Can you imagine if there's going to be tens of thousands of people in all these different cities without a roof over their head? What is going to happen? It's going to get very dangerous, and that's why I've always tried to balance, on this channel, balance preparedness, security, protection, along with investing, watching the markets, preparing for these economic bad times that are now hitting the United States. And we have not even got into the second wave of this illness that we're about to go into with all these newly enforced lockdowns and closures that we're seeing here in California and a few other states that saw big upticks in the virus cases. All right, this article finishes out here, quote, there are millions of Americans now unemployed due to the pandemic with greatly reduced means to keep up their mortgages, unquote. That was Todd Tita, Adam Data Solutions Chief Production Officer. He continues, quote, at some point banks are going to need mortgage holders to pay what they owe and go after those who don't, unquote. What does he mean by go after those who don't? Well, they're going to be foreclosing on a lot of homes. Now, sadly, it is the lower income groups that saw the biggest job losses, because the service sector, the hospitality jobs, all those jobs that are not so, all those jobs that do not pay very well, in the areas that were most devastated by the shutdown, the restaurant industry, the hotels, the entertainment industry, the movie theaters, sporting events, people working at stadiums, not very high paying jobs. But yet those were most of the jobs that were lost in those areas. So it's a double whammy. The people that were already making the least are seeing the biggest job losses. So this could get absolutely devastating. It's going to go all the way up to the landlords as the property owners once their tenants cannot pay their rent. So if they cut the rent, how many landlords are going to be able to keep up their mortgage payments? Because we know a lot of investors came in, got loans, and if they cannot continue to make these monthly mortgage payments because they have to lower their rents or they may not find renters, they could have an empty home or apartment, what's going to happen? This could easily spill over into a foreclosure crisis, and that's going to go back up to the banks. And guess what? The banks, they're going to get the golden parachute. They're going to get bailed out. The banks will not go out of business because they're too big to fail. We know that. The banks will repossess all these homes. Maybe they'll hold on to them for a few years so they don't overwhelm the market with such a big supply where home prices drop. We know the banks, they want to keep home prices higher. The higher the home prices, the better it is for the bank. The bigger the loan balances, the more in interest the banks rake in. And the more they get the population stuck living paycheck to paycheck. And I've said it before, this is going to be an enormous wealth transfer. The too big to fail banks are likely going to get bigger after all this because, again, they don't have any repercussions to pay for loaning out money they don't have, for loaning to people that they should have given loans to. A little more out of this article here. According to Mortgage Bankers Association, as of the last week in June, there were about 4.2 million mortgages in forbearance. Right, so you let me know, please, what is it going to look like if 20 million people face evictions? Are the landlords going to be able to just lower the rent? And if they do lower the rent, is it going to help? Because if people have no money, if people are jobless, they're not getting their unemployment benefits, or their unemployment benefits aren't enough to keep up with their rent that they were paying, what is going to happen? Is it going to turn into a foreclosure storm? Or will the landlords simply find new renters to pay the same rents that they were charging? I think we're going to see massive deflation. They're going to have to lower the rents. We're going to see rent deflation across the nation, more so in the larger cities, but I think it's going to be nationwide. I think the banks are going to get propped up. They're going to get bailed out once again. I'm hoping that the population, instead of being so divided, they wake up and realize what has been happening and how the banks and the Fed have been looting us with this too big to fail system, with these banks that are too big to fail, while they don't think twice about taking somebody's home and putting people on the street. Tent cities popping up everywhere. It's going to get nasty. It's going to get even uglier. But like to know what you think about it. Let me know down below. A quick shot here of the markets today. Again, July 10th. Dow Jones up 369 points. S&P also in the positive, up over 1%. Gold hanging right around 1800. Now remember, for months and months, and actually for years, how any talk of a positive step in the trade negotiations with China, any talk, any glimpse of any progress, they always said that was the reason why stocks went up. But yet now, it's being reported here, CNBC article, that the trade relationship is severely damaged because of what's happening now between the two countries here. And now the president's out there saying that the trade deal is not even a priority. Yet for years, that was supposedly the reason, the trade talks and negotiations, the progress, was supposed to be one of the reasons why the market kept going up. So this news, with the president saying that this relationship with China is severely damaged, by that logic, the market should have crashed, right? Well, no, the markets are positive again. But yet the Dow Jones Industrial Average stock indexes across the board are still up. So if you haven't figured it out, it's completely rigged. It's manipulated. They're going to keep it propped up for a while now. We only have, 4 more months roughly until that very important date in November. Who knows what's going to happen after that? That's what I've been preparing for. That's my timeline. And we know that a lot of times these politicians, they just want to get reelected. So they will try to keep things taped together, in the meantime. But what's going to happen when there's no longer an incentive for keeping themselves in office, if you know what I mean? So stay ready, folks. It could get really ugly. We're coming in on the crunch time for this economic system. And we could see some bad things happen even before November with these evictions. This foreclosure crisis is likely to start unfolding. Thanks for watching this report, everybody. Ride the bull, prepare for the bear. Bye for now.